what is the FI mood telling you currently? Because initially we were talking about FI money moving from India to China. Then we're talking about it's not China, probably it's the USA, right?
USA. Correct.
So how is that shift expected to happen from here now?
That shift also, big picture, must be somewhere near the end. So let's look at it. So there are, let's say, two kinds of investors, and I don't think there are three kinds. One would be a global investor who can invest in US, can invest in India, China, etc. And then there might be a investor like basically who can invest, or generally his fund is an emerging market fund or an Asia Pacific fund or Asia Japan fund or something like that. So if you're a global investor, your normal current weight in US will be more than 60 to 65%, because that is, let's say, big picture, the MSCI weight for USA in the world. And India's weight will be, I guess, 1%. Or maybe 1.5%. I don't even think 1.5%. So if you just look at it like that, somebody is saying, I have 60% already in USA and I have 1% in India. Oh, I must reduce because I want to increase my weight in US. So I'm making it 65.2% and reducing India to 0.8. Does it make any sense that beyond a point, this is not the trade? Because A, you have 33%, 34% in the rest of the world from where you can choose if India was otherwise doing well, which broadly, I think it is still doing much better than other places other than US. And secondly, this move is for people who have these two things and who really think that 0.2% more is required in US. So by definition, this must be fast money kind of thing. Some money which is so focused on here and now. But even for this, the cost of this trade here onwards is more than 25%, which means in the last 1 month, say since October 1st, Indian market average stock that if these guys want to sell now may be down 10-15% or 10-12%. And in US, the stocks that they want to buy in this period are already up 10-12%. Or some big picture like that if you compare with the indices. So you have already a 25% difference because you now like US over India, if at all you like it to that extent. And therefore, from here, you should make another 20%. Looks very unrealistic to me. Therefore, I say plus minus a few weeks, this flow will finish. And it already seems to be reducing sharply from 4,000-5,000 crores a day to now maybe 2,000 crores. And let's see how it goes. But I think it'll end soon.
That's interesting, Samir. So you're saying in the next few weeks, maybe FII outflows, foreign investor outflows taper off completely. But when are the inflows coming?
Plus minus zero. Yeah, which means taper off completely, I would say, in another way. But that looks more dramatic than saying that it'll revert to what it is normally, which is that you start from zero and then you see whether it's up or down. But this trade will be over, that you are selling it to buy US.
Okay, but the question is, what are you selling to come to India, or when are you coming back to India? Because I think one thing which has become very clear is the narrative so far was domestic investors are holding up the Indian markets. Who cares about the FIIs? I think that reality check has sort of happened, that yes, FII money is important to the Indian markets as well. So maybe the selling tapers off. When is the money coming back?
You never know these things in that sense, except that overall the world continues to grow a little bit. So every year there's more money. See, please remember, if you look at 25 years or whatever of Indian FII experience, they would have put net money into the market in 20 of those years. I think this year also, I don't know. Now they may have turned negative or maybe not. But otherwise, in the prior to this year, they were negative only in 4 years in history, which were 2008, 11, 18, and 22. So it is not normal to be taking out money because, some X% money goes to emerging markets. For some pension funds or big endowment type, they're rebalancing that if US has gone up so much, then we'll take 1% off and put it into India, China, whatever. What I mean is, it is not only that a market going up keeps getting money, and actually India overall has been doing well. Plus, also understand that even if you say 60% US is doing well and they are 60% or 65% invested, they have 35% from where our weight will be 1%. So for us to be kept constant at 1 or made 1.2 doesn't need some great thing that US has to do badly. Broadly speaking, countries which are doing well get money because there is always new, let's say the world is growing at 2.5-3% GDP. That means X% is the savings, say it's 5% of that, whatever be the amount. But every year the world grows, and every year the AUMs grow, and every year flows grow. And India may not be the best country in the world to invest, but it is not so bad that you should take out of India to put in other markets other than US. And the US is not that the US market will stop going up, but it's not that our market is the only funding market that is there in the world. There's no reason for it, because we may not be the best market. We are, let us say, the 5th best market now in terms of attractiveness, not in terms of size. So I don't automatically mean that India is the funding market for the rest of the world. Doesn't make sense.